Manufacturing business accounting, format of income statement. Income statement for a manufacturing business, Commerce Lecture Online, Cambridge International Examination pattern. This is how the format of an income statement should be framed. We can use two columns. In internal column, we'll do our calculations, and in external column, we'll be writing the final amounts of revenue, that will mostly be the sales revenue, subtracting cost of sales, adding other incomes, and subtracting other expenses. Mainly we have four parts in income statement. Our first part shows us the revenue. If there is any revenue return, that means the sale return, it will be subtracted from here. Then comes the cost of sales, important portion. In cost of sales, we'll be adding opening inventory of finished goods with the cost of production. Cost of production will be calculated in another statement which is known as manufacturing account or cost of goods produced statement. Its format is also given in the same playlist. Cost of production along with the purchases of finished goods and carriage on finished goods. These four things are to be added and their total is to be written here. From this answer, we will be subtracting closing inventory of finished goods, if there are any goods taken by the owner, and if there are any goods returned to the supplier. These three will be subtracted from this answer, and our final amount is known as cost of sales, which will be written just below the net sales or the net revenue. After subtracting cost of sales from this revenue, our amount or answer will be known as gross profit. In gross profit, we add if we have any other incomes. The common example of other incomes for a manufacturing business could be commission received, rent received, decrease in provision for doubtful debt, gain on sale of non-current asset. If we have any other incomes, they will be added and their total is to be written here, which will finally be added in gross profit. Whatever expenses are given to us for a manufacturing business office, they are to be listed here. The total of all these expenses, which could be the insurance, rent, premises maintenance, office wages and salaries, advertising, administration and finance cost, provision for depreciation. If we have decrease in doubtful debt, provision, that will also be considered. It should be increase in the provision for doubtful debt. If we have increase in the provision for doubtful debt, that should be considered as an expense. The total of all expenses will come here. This total is to be subtracted and other income is total is to be added in this gross profit, and this is how we get profit for the year, which is our actual revenue for a manufacturing business income statement. Like, share, subscribe, Commerce Lecture Online.